Our top story tonight is the goods and services tax back on the drawing board. The centre bends to demands from state governments, agrees to rework the constitutional amendment bill, or so it seems. Sources say fuel products entry tax could be kept out of GST. The compensation structure is likely to be part of the constitutional amendment. A rollercoaster ride ends on a sour note. The Sensex down over 200 points. The Nifty breaks below 8,300 as a late sell-off dampens sentiment. Is the rupee's resistance finally over? The Indian currency weakens to its lowest point in 10 months, now sits well above the 62 mark. The government readies a plan B to meet its disinvestment target. For this fiscal, looks to add more companies to the divestment list as a cloud hangs over ONGC and Coal India's stake sales. That's an exclusive. A shot in the arm for telecom companies. More spectrum will be up for grabs at the upcoming auction after the Defence Ministry agrees to vacate some spectrum, but telcos continue to fume over the reserve price system as global CEO fears lack of participation due to high prices. The government tables the coal mines bill in the Lok Sabha as the auction deadline looms. The bill is set for a smooth passage as the Congress agrees to support. The crude rout continues. Prices hit fresh 5-year lows. Brent slips below $64. European markets trade mixed. Wall Street rallies, but stocks in Russia stank as the central bank hikes rates and slashes its growth forecast to almost zero for 2015.
President Putin is a leader of India's key strategic partner and personally a great friend of India.
Well, two of the most powerful men in the world, Russia's Vladimir Putin and Prime Minister Narendra Modi, met in the capital. 16 agreements being signed. Russia agreed to sell 12 nuclear reactors to India. Prime Minister Modi also gave a strong vote of confidence to Russia, which struggles to find allies after the crisis in Ukraine. I quote, "Russia remains India's most important defence partner," said the Prime Minister as he reaffirmed India's long-standing partnership. Good evening. Thanks very much for joining us on India Business Hour. A detailed report on Putin's whistle-stop visit coming up in just a bit. But first tonight, the day's trading action. It was a roller coaster ride on Dalal Street, one that ended on a sour note. The Sensex lost over 200 points in what was a very choppy session. The Nifty down about 60 points, breaking the 8,300 mark. Mid-caps also falling in tandem with blue chips as a late sell-off caught the bulls off guard. Anuj joins us now to wrap up the day's trading action. Anuj, we saw some stability yesterday after the 3-day sell-off. Now we're back in the correction mode. Are the bulls losing their grip?
Well, clearly the near-term trend for the market is down. Today was a bad day. In fact, bad would be an understatement. Today was a copybook day for the bears. You had a gap down opening, which meant that if you had short positions overnight, you would have made money. During the day, the market recovered to be almost in the green. That was sold into, and the market closed practically at the low point of the day and breaking some important support marks. So really, it's a copybook session that you had today. The Nifty has now corrected 4% from the peak. You'll remember the last time we had a correction, it was 5%. So that would give some hope to the bulls that maybe, this time around as well, we bounce back from there. But that's something that we'll have to find out. Drag on the index, 3 large caps, all contributing more than 10 points to Nifty's decline. Reliance was down 3%, breakdown on that stock. Infosys down 2%, and ICICI down about 1%. Some other prominent Nifty losers included ONGC, HDFC, Bharti Airtel. All these stocks have been quite weak. ONGC in particular has been one of the weakest stocks in the stock market. Commodity stocks were down, as you would expect on a day like this. So Jindal Steel, Tata Steel, Kane, they were all down in trade, all down between 2 to 4%. On the gaining side, really one stock which has been remarkable in its strength is ITC. That was supporting the market again, though 0.5% higher only. Tech Mahindra was up 2%. That stock was remarkable in its strength. And Coal India was up 1%. Finally, to the mid-caps, Havells for second day running was stock of the day, down about 10% in today's trade, down 18% in 2 days. HDIL and Bharat Forge were other prominent losers. And on the gaining side, you had Network 18, the company that produces this channel, that was up about 14%. Shrey Infra was up 16%, and Patel Integrated Logistics was locked on upper circuit. So that's the market for the day. 8200 to 8250 still remains the support zone to work out with. If that's broken, then really, you're looking at lower levels. But as of now, bulls would expect that there would be some support between 8200 to 8250.
All right, Anush, thanks very much for joining us. So it looks like we could be in for a further correction in the short term. Now, the rupee today falling in tandem with the stock markets. In fact, rupee hit its lowest level in 10 months, ending well above the 62 mark against the dollar. Lata joins us now with the money market highlights. Lata, is the resistance in the rupee over? Should we expect the currency to weaken further?
Well, there's no panic buying of dollars in the market. The rupee has been a rank outperformer compared to emerging market currencies. As well, even after the past 5 days of equity market falls, the rupee has been relatively resilient. So today's fall just had to take cognizance of all this news. Even with this fall, the rupee is nowhere near the kind of falls that other emerging market currencies, even notably the won and the yuan, have seen. And those are relatively stronger currencies. The rest of them, like the ruble or the Turkish lira, the rand, the Indonesian rupee, have all fallen much more. So this was a much needed minor correction vis-a-vis the Indian stock markets. There was a lot of covering of short dollar positions that we saw. This correction happens once in a way. And perhaps the slowness or the fall in the rupee may continue maximum for a couple of days. There was talk that the central bank was supplying dollars at that 62.35, 62.33 mark, because the rupee went to that level repeatedly and then again appreciated and again went back to the 62.30 to 62.35 levels. But not all dealers corroborated. The central bank actually would be happy with some depreciation.
All right, Lata, thanks very much for joining us. So a 10-month low there as far as the rupee is concerned. But to the big story this evening is the goods and services tax back on the drawing board. Today, the state finance ministers met with the Union Finance Minister Arun Jaitley to find a consensus. The result, just one state was in favour of the state's draft constitutional amendment bill, which was circulated to state governments on the 4th of December. States were firm on the three sticky issues. They want petroleum products and entry tax out of the GST's ambit and the compensation structure to be part of the constitutional amendment. And it looks like the government is likely to relent to at least some of these demands, or so it seems at this point in time. Finance Ministry sources say they are hoping to rework the draft bill to address some of the concerns expressed by the states. Let's listen into the chairman of the empowered panel on the goods and services tax.
These issues relate to petrol and petroleum products, and the empowered committee has recommended that petrol and petroleum products should be kept out of GST. Number one. Number two, entry tax should also not be subsumed, and it should also be kept out of GST. The third thing is about the GST compensation. We have told the Honorable Finance Minister that GST compensation fund should be created and it should be provided in the Constitution.
Well, that's the chairman of the empowered panel on the GST. Our colleague Sapna Das, who's been tracking all the action through the day today, joins us. Sapna, the meeting continues with the finance minister. Can we now rule out the possibility that the constitutional amendment bill will go through in the winter session of Parliament?
Well, at the moment, it doesn't appear to be a tall order because the dialogue between the centre and the state is still going on. And we need to really wait and watch and see where is the consensus, in the sense, are they able to arrive at the point of consensus So that's one. Though, of course, the centre has indicated very clearly to state governments that they will be compensating them for any money lost on account of GST rollout. Despite that, we have to wait and watch and see now what really emerges. Is there a consensus finally or not on those three issues which states have flagged off? Apart from that, the fact that they're back on the drawing board, there is a bit of redrafting that's on right now. So it depends. It really remains to be seen. How much time will the procedures take to work out? Law ministry vetting might be required again. A cabinet nod will be required again. Then you take it to the parliament. Jayant Sinha yesterday had indicated that the current parliament session, the legislative calendar looks very packed. So it really remains to be seen whether they are able to bring it, still push it in the current session, or will it get postponed to the budget session.
That is the question that we need answers to, but at this point in time, the answers are not forthcoming. Sapna, appreciate you joining us. As Sapna was pointing out, the meeting is still on. We've had meetings through the day today, and the meeting continues with the Union Finance Minister, Arun Jaitley. So a big question mark there on the GST. It could be a further setback for the goods and services tax. Now, a major boost for telecom companies ahead of the spectrum auction. The Defence Ministry has agreed to vacate some spectrum in the 21 megahertz band. Sources say the telecom department has also finalised the reserve price for the upcoming auctions. Malvika is here with more details. Malvika, there's been a lot of back and forth on whether Defence will finally vacate some spectrum or not, and they have agreed to vacating a certain amount of spectrum, have they not?
Well, that's right. This has been a bone of contention between the Defence Ministry and the Telecom Department. Finally, there has been some breakthrough in this, and now 5 megahertz band of spectrum is going to be released by the Defence Ministry, and this is going to be put up for auction most likely in February, along with 2G spectrum. This is going to be a big relief for companies like Bharti Airtel, Vodafone, Idea, and Reliance Communications, for whom it is necessary to participate in the upcoming spectrum auctions, given that in some circles their licenses are coming up for renewal, and the government has made it clear that they will have to go to the market and win spectrum. And with limited availability of spectrum in 1800 and 900 megahertz band category, there was a concern that artificial scarcity of spectrum is being created, and now with the release of these 5 megahertz, at least one company will be able to win spectrum in around 17 circles for 3G spectrum. Going forward, there is a possibility that Defence Ministry may also agree to a swap agreement wherein it will release additional 15 megahertz band of spectrum, which would be put up for auction by the Telecom Department. So clearly good news for telecom companies, though they continue to be worried about the spectrum reserve price.
Oh, they do continue to be worried about the spectrum reserve price, Malvika. Thanks very much for joining us. In fact, that's the story that we're taking forward. The latest pricing formula continues to give telecom operators a bad case of heartburn. Mikhail Shamulin, the president and CEO of Systema, told CNBC TV 18 that spectrum is priced at a prohibitive rate, and such a rate may well hamper further investments into the country. Listen in.
For us, it is very important to understand how the telecom policy will be changing and evolving in the future, what is going to happen with the spectrum availability. The kind of prices on the CDMA spectrum that we saw announced recently are exceptionally high and almost prohibitively high for making a return on telecom investment, and we will be in, I think, deep discussions on that. As far as the size of the investments is concerned, I think it's a bit early to tell. It will depend on the auction, on the spectrum pricing discussion.
So the spectrum price still high, says Systema, but from one auction to another, and now we're talking about the coal auctions. The coal mines bill has been tabled in the Lok Sabha. The bill will pave the way for the upcoming auction of coal blocks. It could be a smooth passage for the government over the coal bill, because sources say the Congress party has been won over. The Congress party, after resisting the move to denationalize, or at least what it sees is denationalization of the coal sector, seems to have come on board. This after the government convinced the party that the bill will not lead to denationalization of coal mines. In fact, the Coal and Power Minister Piyush Goyal reiterating that this will be the case while introducing the bill. The left parties and the Trinamool Congress continue to oppose it. The debate will continue in the Lok Sabha tomorrow. Now, with just over 100 days to go in this financial year, it's a race against time for the government to mop up revenues to meet the ambitious 4.1% fiscal deficit target. The Finance Minister has reiterated that the government will meet that target. And in a bid to achieve that, the centre, we now learn, is looking to add more companies to the disinvestment list. Remember, this is going to be a backup plan of sorts because the centre was hoping to actually push through with ONGC and Coal India, but that's looking tough. So now the centre hopes to identify 14 to 15 new companies. There is going to be a crucial meeting on Monday and Tuesday to identify new companies, but the government will only look at selling stake in 4 to 5 companies this financial year, and the rest will be pushed to FY16. Now, what's the reason for this backup plan? I'm being told that the ONGC disinvestment is stuck as investors continue to worry about the subsidy sharing mechanism, and more importantly, look at where crude prices are, and that's impacting the ONGC stock. The stock even today was down over 3%. Now, we understand that the Prime Minister's office and the Oil Ministry with the Finance Ministry are meeting regularly to try and thrash out a subsidy sharing roadmap, but there is a concern that given where the prices are today, maybe it's not a great idea to offload stake in ONGC. Even though there could be a resolution that could be reached soon on the subsidy sharing issue. The next big stake sale is Coal India, but the upcoming coal block auctions remain an overhang, and investors also want clarity from Coal India about its production targets, so Coal India has a question mark as well. Not just that, let's look at the IPOs that the government was lining up. The Defence Ministry's reservations over the Hindustan Aeronautics IPO is yet to be addressed, and hence HAL may be pushed back even further, and the RINL IPO plans, which had been hit by Cyclone Hudhud, may be revived. We also understand that the centre is unlikely to sell Sooty stake in ITC, Axis Bank and L&T anytime soon, so there's a backup plan now for disinvestment, and maybe we will get clarity on the new companies that will be added onto the disinvestment list on Monday or Tuesday. Financial regulators, including RBI, SEBI and the IRDA, are working on creating a common account aggregation facility which may allow people to get details of all their financial assets in one place. That's according to the RBI governor, who spoke after the FSDC meeting in Kolkata. He also said that the current account deficit is comfortable, but the direction needs to be watched. Listen in.
We had in the afternoon the FSDC subcommittee meeting, where all the regulators were present. And we discussed a number of issues of common interest, including the possibility of creating some kind of platform where people could see their accounts across a variety of regulatory bodies. So you could see your demat shares account along with your deposit account, etc., and see what kind of activity has been going on there. Regulators have been discussing ways to move this forward, and we've come up with a structure to put this to move this going forward. On the current account deficit, it certainly has widened. It still is at 2.1% is comfortable, but of course the direction is something that we will be watching carefully. The gold imports have increased. Now, the question is, after liberalization, will they increase substantially more, or in some sense, were we near the actual demand in the economy? So we have to watch and wait and watch that. It would be hard to maintain the kind of restrictions that we had for too long a period. At some point, we had to start taking off the restrictions.
Well, that's the RBI governor on the current account deficit. Sugar stocks finally have something to cheer about. The share prices of sugar companies jumped between 4 and 6% today after the government, for the first time, de-linked the price of ethanol from the price of petrol and linked it to the price of cane. Varinder Bansal and Archana Shukla get you the details.
Cane farmers and sugar companies can now look forward to some relief. The Cabinet Committee on Economic Affairs has hiked the price at which oil companies can buy ethanol from sugar companies to blend it with petrol. They will now have to pay 48.5 to 49.5 rupees per litre instead of the 29 rupees per litre of ethanol they've been paying so far. This has the Indian sugar sector on cloud 9. Mainly because companies stand to make a lot more in realizations, up to 5,000 crore rupees annually, going by back-of-the-book calculations.
The government has increased the ethanol procurement price at the mill gate by almost about 1 rupee 50 paisa per litre. So if I talk about 100 litres of procurement, it means about 150 crore rupees annually extra for the sugar industry. But if you look at the revenue realization for at about 49 rupees into about 100 crore means about almost 5,000 crore of revenue realization, which today was about, I will say, about 2,000 crore.
The sugar industry also sees this as a clear indication by the government that it is interested in taking the ethanol blending program to the next level. And if mandatory ethanol blending spikes from the current 5% to 10%, the sugar sector is in a sweet spot.
The government has also indicated that 5% mandatory has to be across the country, but it can go up to 10% if the supplies are there. Now, if you really look at the Maharashtra sugar prices, it's hovering around 25, 26. And if they can convert some of this surplus sugar into ethanol and supply for this ethanol program, not only will we get higher quantum of ethanol, more than 5%, but some of the surplus sugar can very conveniently get converted into ethanol.
The higher price for ethanol may be welcome relief, but the sugar sector wants more. The industry is looking forward to any announcement the government may make on extending export subsidies on sugar. And ISMA hopes something on these lines will be announced in the next 10 to 15 days or so. In Mumbai with Varinder Bansal, Archana Shukla.
So good news there for sugar stocks. We told you on Monday that the competition watchdog has cleared the $4 billion deal between Sun Pharma and Ranbaxy with readies. The CCI has asked both companies to sell 7 brands within 6 months for the deal to go through. Archana Shukla caught up with Israel Markov, the chairman of Sun Pharma, today. Here's a slice of that conversation. The Sun Pharma chairman saying they're comfortable and will be proceeding with the divestiture shortly.
First of all, I have to tell you that we have started the day after the CCI order. This is number one. Secondly, look, we are divesting good assets. We are not divesting bad assets. We are divesting good assets. And you have a lot of buyers for good assets. And we will have no problem of this divestment. And we will do it as fast as we can. But it will be fast.
With the CCI's nod already in place, FTC dialogues progressing, what sort of a timeline have you set for yourself or the two companies to close this deal?
Look, we have set a time at the beginning which will be, by the end of this year. But the delays are not delays by us. It's not that we are unable to close. We were ready to close 6 months ago, that's the issue. But we are waiting just for the approvals, and I hope that within the next few weeks, the next very few months, we will get it. That's all.
Well, a confident chairman of Sun Pharma, they're saying they have no issues with divesting the brands as per the CCI's direction. Now, Russian President Vladimir Putin concluded a whistle-stop one-day tour today, during which more than a dozen agreements were signed in a wide area of fields from energy to defense to diamonds. Zakhajev explains why this summit was important to reaffirm India's long-standing partnership with Russia at a time when Moscow is getting close to both Beijing and Islamabad.
Two of the most powerful men of 2014 walking into Hyderabad House. Narendra Modi and Vladimir Putin shared the 15th annual India-Russia summit, in which as many as 16 agreements were signed. The agreements cover a wide range of topics, from nuclear energy to defense.
The main thrust of the 15th Russia-India summit has been the Make in India campaign, the pinnacle of which is Russia agreeing to fully manufacture here in India the advanced reconnaissance and surveillance helicopter, the Kamov 226T. So much so, Narendra Modi calling Russia India's most important defense partner.
The character of global politics and international relations is changing. Russia has been India's foremost defense partner through decades.
The other big theme of the summit was nuclear energy. The Russian-built Kudankulam 1 is already operational. Both sides are on course for the next 3 reactors, which will add 1,000 megawatts each. State-owned Rosatom will build 12 nuclear reactors. The Russian president even set an ambitious goal. His country is committing to build 20 more nuclear reactors in India.
We are highly appreciative of the friendship, trust and mutual understanding with India. We're going to do everything in our power to develop the Russian-Indian partnership for the sake of our two great nations.
Both sides did admit that outside of energy and defense, the quality of cooperation has been rather poor. Bilateral trade stands at 10 billion, which is well below par. Something that explains Modi and Putin's joint appearance at the World Diamond Conference. An attempt to bring together the world's largest producer and the world's largest cutter of diamonds. In New Delhi, Zaka Jacob.
while re-engaging with Russia. On that note, it's time for us to say goodbye to you on this edition of India Business Hour. We'll be back with the trading action tomorrow. Till then, from all of us here, goodbye. Thanks for watching.
CNBC TV 18, celebrating 15 years of leadership.